Good morning, everybody, and this is your Dow Jones day trade setups for today. So, we had the barbed wire, which with the oscillators sort of all over the place with diversions and everything happening, and of course then we had the little bit of a reset and then a big exhaustion bar down. And this is the level I'm picking up. I'm not worried about these tails just yet. This was where previous support was. You can see previous rejection. It's of all the levels in this zone, that is the cleanest level I can see, and we are at the moment finding support. I think the key thing here is that you have a crossover of the moving averages. We obviously want to test the 155 again. You see we did test it last week, but now we're looking for another sort of retest in this zone. Non-farm payrolls happening today, so you do have something to pay attention to. And then the second thing that you do need to pay attention to is this the start of a channel? Remember, a lot of times you get this aggressive spike up, which is what you had here, what's that, 2 weeks ago? Yeah, there's an aggressive spike up, and then you go into a channel. So if you actually look through the history of the charts, you see it often happens like that, where you have aggressive move, and then it gradually moves into a channel. And then the channel can go on forever, but often what happens is it goes on for an extended period of time, and then we'll break the channel, reset lower, opportunity to buy, and then we break that channel structure and we start moving again. So that's the two scenarios we have at the moment. For me, non-farm payrolls is critical. So we do have a little bit of structure to the downside here, and I'm going to just want to talk about that quickly before we go into the lower time frames. This area at 34,300 and 34,200, that is a fairly decent area for support. Now, non-farm payrolls day. So often you get this massive move in one way, in one direction, as the data comes out and as the algorithms are trading. And typically, when you're in an uptrend like this, or starting to get into an uptrend, this is almost a confirmation of a trend reversal. What you're looking for is a big move down onto some high level structure. And when you look at high level structure, it's weekly, and you can see there is the zone that I'm talking about. And if you look at all the buyers that come in that area, you can see how they've come in. So the minute you've got non-farm payrolls coming out, you have this massive move to the downside, hypothetically speaking here. And as soon as we get into the zone, what you'll be looking to get down to lower time frames, small trading position, wideish stop, and you're looking to jump in on that trade. Reason why you'd be looking to jump in, and you'd be looking to say, oh, I'm going against the trend, but you're not. The bigger trend is up. So on the lower time frames, it'll look like you're aggressively going in against the trend, but that's why you'll come into this zone and you're going to keep a wide stop loss. I mean, non-farm payrolls, you're looking at 700 point stop loss. So your position size is really going to be very small. Often what happens is you get there, the buyers see the value, they step in and they drive it all the way back up to where the data, before the data was released, and then it's decision time whether it then starts drifting lower or alternatively it just starts carrying on to the upside. Anyway, so you need to pay attention to the levels quite far away, and the converse is true to the upside. So good data lies up to a level, you often find people to take profit from their longs, or they jump in shorts and they wait for the pullback into the zone. And often that happens in the first 15 minutes of the data being released. Okay, so bottom of channel possible. One thing is for sure, in the 3 hour, we are definitely in an uptrend, and we've been there for 2 weeks. So it's starting to be a fairly strong trend reversal that is forming. This zone down here, you can see how we were battling against it, trying to reject it, because that's pretty much where the buyers were coming in the previous year. And eventually that failed and we got through. So the probability of us falling through here, just based on non-farm payroll data, is not that good. There's a lot of other things in the market as well. Non-farm payroll is just one of the volatile situations. So pay attention there. I think that's the key thing. Trend is up, moving averages up. So even a quick squirt down here, I'd definitely be looking for some kind of long, but I'd be having 1,045 point stop loss. I'd be dropping below this pin bar here, because the volatility can extend down to this level as well, which would be 33,700. Okay, so but small position. And the problem with this is you've got to be on a very low time frame looking for the structure, because it often just touches and then flies. Okay, on the hour. So just have a look at yesterday first. So we were pretty much doing nothing all over the place. I said to you, I'm not interested in this sideways. You can see there's a sideways. There where you thought a pin bar, and I did actually think there was an opportunity brewing there on this hourly pin bar. But then the next bar was another pin bar, so there was still an opportunity, but your entry would have been above the high of those tails. That never materialized, and we dropped. This to me is an exhaustion bar. It's an exhaustion bar going into the close for some other reason. I don't know what the noise was, but that is pretty much what happened. So there wasn't really an opportunity for trading yesterday. It wasn't even a rejection on the hour. But if we start dropping down to the 15 minutes, you can see there's your crossover happening of the moving averages. There's a story of three tails. So that there was probably an early signal. Probably just, what was that, 5, 6, yeah, so that was just off while we were doing the videos, in actual fact. So there's a lesson learned, good opportunity there. Jump in on that with a stop up there. That's only a 67 point stop loss. So you can have a relatively large position for a potential 546 point move to the downside. So lesson learned there. And then you have a crossover. There's a crossover, and then you have a rejection of the crossover here. So there's another pretty solid entry. Entry would be there, stop would be above there. So that's a basically 75 point stop loss for a bigger move of 400 points. So yeah, there definitely was a trade there, but you needed to be watching the 50-minute or even the 5-minute. And you can see the 5-minute offers a lot of opportunities where we reject the moving averages, rejecting the 155, rejecting the 155, rejecting 155, rejecting 155. And that's the story of threes on the 15-minute. It doesn't really look like much on the 5-minute, but that's one of the reasons why I do enjoy watching the 15 minutes if I am sitting in front of the charts. Anyway, that is kind of a situation at the moment. I'm very skeptical about jumping in long here. I suspect we may just drift lower, or alternatively we're just going to drift sideways. And the trick today is wait for non-farm payrolls, get on with your life, do your other things, wait for non-farm payrolls quite late in the afternoon, and then you can quickly have a look, have your levels drawn in so you know what's happening. Once the data's out, you've got basically 15-20 minutes before the market actually sort of settles into direction, so it'll be volatile until then, and then you'll be able to see what the opportunities are. Yeah, that's kind of my view at the moment. Is just sit on hands. It's non-farm payrolls. As far as I'm concerned, the US market is starting to look like a buy the dip market, so let's see whether that transpires or not today. Hope it helps, and we'll catch up with you on Monday. Enjoy your weekend. Cheers for now.